Today, the price of silver would be $12 if you were to buy it with $19.80. Today's silver price is $12 an ounce, which is $19.80. Quite a ways still to go. God, it's crazy. They believe they can catch it at this height, but they have no clue where it's heading. Nothing like it has ever been seen before. This silver market is experiencing something never seen before. At this time, we do not have any liquidity available. According to Bloomberg, some traders have hurried to reserve space in the cargo holds of transatlantic flights for large silver bars because the silver squeeze has grown so severe. Imagine you're a trader with the option to profit from a 20-cent spread or a $8 opportunity in China. Yeah, $8,000 in different accounts. You have to decide. They're going to attempt this in an effort to fix London, which is in a precarious situation. Furthermore, a sudden spike to triple-digit silver prices could occur if the London market were to freeze. I mean, this could happen in the blink of an eye. Salutations to all. With the Silver and Gold Show, it's Mike and Alan. What do you have to offer me, Alan? Salutations, Mike. Yeah. The silver market, for example, is at a standstill at the moment. It's kind of collapsing right in front of our eyes. Because of this, I would like to report on a few of the recent events. Hello, Silver Shorts. Here we go with our first item, a tweet. Is it any worse for you now? Behold this too. The silver lease rates have skyrocketed to 33%, as you can see. This is completely out of control. It was around 9% or 12% when we covered this story a week ago. And it's now 33%. God, this is ridiculous. Yeah. This is a chart for the long haul, and that's one thing I want to stress. While I have included charts in a couple of my recent videos, none of them cover the past 7 years to the same extent as this one. This one demonstrates that the mean is approximately 0. I mean, there's no variation of more than 1%, or even less than 0.5%, is there? It's par for the course, below the ±1% mark. However, there are instances when you're being compensated for it, isn't there? And then, all of a sudden, we're at, where is it peaking? 33% to be exact, 33.5%. Holy cow, amazing. Think about it. Your mortgage payment goes up to 33% out of nowhere. Too difficult. Yeah, the market is about to collapse right in front of our eyes, I see. You have to consider that all the shorts are initially losing a lot of money. On top of those losses, you have this. Plus, it's a snowball effect that makes things even worse for them. They need to buy silver on the market and return the ounces they borrowed and sold, for which they are now paying a 30% premium in order to cover their positions. I understand. Okay then. Yes, precisely. Unfortunately, the lack of physical manifestation is a major issue here. There isn't a single ounce of silver in circulation in India, despite the fact that demand is driving up prices and some buyers are even willing to pay a premium for the precious metal. Therefore, there is an extreme lack of physical. Yes, that is the issue. When I mentioned that the metals would soon be unaffordium and unobtainium, this is exactly what I meant. Actually, it's in stages. And we are currently experiencing that. Forget about getting it. Therefore, they are offering a higher price than what the official exchanges are indicating is the true market value. If everyone is ready to pay more, then the price they're quoting isn't accurate. Yes, precisely. In the midst of a worldwide silver shortage, this is leading Indian funds to stop investing in exchange-traded funds, ETFs. The physical silver market is experiencing an unprecedented shortage, and some Indian asset managers have stopped accepting new investments in silver ETFs due to the lack of physical silver. A major issue has arisen. Yeah, at least 2 things. A manipulative tactic. A regulatory body similar to the SEC or CFTC in the US exists there. Therefore, those in charge can control the price simply by preventing you from making a purchase. No matter what happens, you will suddenly be unable to add to your position if you have one of their ETF accounts. You simply cannot make a purchase using that method. If funds like SLV and GLD can treat their investors this way, are you sure you want to be a part of them? They are completely off limits to me. Yep. I feel the same way. By the way, didn't this take place in 1980? Their method for setting a limit on silver's price was that? Only sell orders, they said. Liquidation. Yeah. They defeated the Hunt brothers in that way, didn't they? Yeah. As a result, I feel like the answer is crystal clear. As soon as possible, get physical, get it in your possession, and wait. Yeah. How easy. In any case, it's not only India, China is involved as well. Accordingly, an ounce of China's raw silver costs $59. The real market assumes command. Greetings, this is Mike. My message is brief. Although I'd like to extend a warm welcome to all of the new viewers of our films, I feel compelled to mention that only about 15% of you have really subscribed and enabled notifications. Some difficult times are ahead of us. Therefore, turn on notifications if you would rather not miss any updates. Also, I appreciate you constantly giving me the thumbs up. And finally, for almost 20 years, goldsilver.com has been a premier source for high-quality instructional materials. We would be truly grateful if you could consider us as your precious metals dealer so that we can carry out this important work. Returning to the video now. China. Accordingly, an ounce of China's raw silver costs $59. The real market assumes command. Thus, Shanghai has just sent out a massive signal. Silver on the COMEX is trading at around $51, while physical silver is trading at over $59 per ounce. An $8 premium is an insurmountable disparity. $8 is a pretty big sum when measured from coast to coast. A lot of regular people in the West are selling because they think silver is at an all-time high, which is sad because it creates an arbitrage opportunity and means that silver will be flowing a lot from the West to the East. Yes, it isn't. We adjusted for inflation. We recently did an exercise where the price of silver would be $12 if you were to use $19.80 to buy it today. So silver is way expensive. Today's silver price is $12 per ounce, which is $19.80. Quite a ways still to go. God, it's crazy. They believe they can catch it at this height, but they have no clue where it's heading. All right. Yes, precisely. The current price of silver is at a nominal high, but in order to reach a new high, when adjusted for inflation, it would need to rise by a factor of 4. Thus, silver remains incredibly inexpensive. Sure, no doubt about it. Never encountered anything comparable. Silver dealers scramble to get bars to London as they face historic pressure. Despite this, Goldman continues to recommend gold. A commodities hedge fund manager has provided us with a quote. Nothing like it has ever been seen before. This silver market is experiencing something never seen before. At this time, we do not have any liquidity available. All right, Mike, this is a component of the arbitrage you mentioned. According to Bloomberg, some traders have hurried to reserve space in the cargo holds of transatlantic flights for large silver bars, because the silver squeeze has grown so severe. As you pointed out, they are attempting to profit from premiums in China and London. The silver is, in fact, moving eastward from westward. Yeah. I read this article, The article mentions that the spread is relatively small at around 20 cents. Somewhere. 20 cents per ounce, there it is, at the very top. Until that banner arrived, that is. Consider this scenario. You're an investor. and you have the opportunity to profit from a 20-cent spread. Or is it $8 in China? Oh, absolutely. $8,000 in different accounts. You have to decide. They're going to attempt this in an effort to fix London, which is in a precarious situation. Furthermore, the worldwide silver market will also freeze if London does. Then, out of nowhere, we have silver in the triple digits. I mean, this could happen in the blink of an eye. If you could choose between making $8.20, I'll have to think about it. That one requires a lot of contemplation on my part. Thus, many private investors will be sending silver to China to sell at 59 cents instead of this 20-cent arbitrage, all while attempting to patch up the problems that have arisen in London and the bleeding that is happening there. Here is an update on the silver refiner. The majority of the silver in constitutional 90%, junk, sterling and scrap is now being recommended by American silver refiners to dealers at a 50% spot price. A big, trustworthy bullion dealer sent the message below. Clearly, Mike, you're in the business of dealing. Please explain the significance of this. This, then, is the rationale behind the purchase of premium goods made of 99.9999% fine silver. Plus, there's no need to re-refine it before selling it again after that. The product can be tested without the hassle of visiting a refinery and waiting in line. Currently, every refinery is at a standstill. Someone was attempting to correct me in the comments section after I posted a video in which I mentioned mine supply, claiming that it was not mine supply. Because silver prices are at an all-time high, everyone in the West, especially the United States, is selling their silver. It makes no difference if they are selling trophies, jewelry, silverware, and other items that must be sent to refineries. The fact that the refineries are the bottleneck and that the supply of old silver cannot meet demand is what really matters. This occurred while it was sitting. In 1980, it was referred to as the Big Melt. It caused a bottleneck in the supply chain, which meant that customers had to wait over 6 months for their silver, and that they were offering 30-40% of spot for products that needed to be re-refined. For this reason, I refrain from offering suggestions. However, all of the products in my possession do not require further processing at a refinery. The takeaway here is to be selective with your purchases and make sure you're getting the right things, but also to have faith that the market won't see a dramatic drop in silver prices due to an influx of the metal. Rising refinery costs are only one of the numerous factors that will cause silver's price to skyrocket. An important bottleneck is the refineries. Sure, I see your point. Your commentary is greatly appreciated. James Henry Anderson points out that silver is once again serving as a global store of value. On top of that, he has the silver price in, 55 different currencies? In each and every one of them, silver has skyrocketed in popularity. Yes, all you have to do is mentally invert the situation so that the value of each fiat currency falls precipitously relative to silver. That is unacceptable. Rip off fiat money. Yes, exactly. According to him, this is an article about RoboTigre. Now silver is worth $65 to Bank of America. Sure, I can help you out. Excuse me. Already, I'm giggling. Yes, I also. Just saying it makes me laugh. These dweebs who are juggling things could pull this off before the month is out. I understand. As the London market falls into a quote state of seizure due to the price spike, Bank of America now views $65 silver as extremely serious. Their prediction is for the year 2026, when they expect it to take place. All right then. I understand. I mean, by the year 5000, gold might be at 4200. I can't believe how far behind the times these folks are. They appear to be oblivious to or uninformed about human psychology as they cling to the past. Yeah. Or mathematics. I understand. All right, those caught short silver in London are finally being shown live. Very cool. Your presentation, Alan, is greatly appreciated. Yes. Much obliged, Mike. I understand. Later, everyone will see us. Thank you.